Okay, a very warm welcome to everyone here. So I'm just here on this quick video just to show Jim actually, and of all of you guys in the Elite Traders program, just to see how we can fill up this spreadsheet for the backtesting and to help us with our research results for the DB Elite strategy. So let's go through this Excel spreadsheet at the moment that I have. Actually, thanks to Sandy, he has actually put this together. He's actually upgraded the current template that we have. So let's go through this. So I've got Jim as well. Hi, Jim.
Hey, yeah.
Yeah, okay, good. So now let's, Jim, so let's go through this. So basically, we've got these three columns here. Now, the dates haven't been updated, Jim, yeah?
Yep.
So what you can do is that you can refer back to the DB Elite master list and go under the GBP/USD tab and just copy it over, basically. Do you get what I mean?
I've got them all written down there anyway, so I just need to change them.
Okay, no worries. So you got them anyway.
Yeah.
If you don't have, you can always refer back. Now, where are the files? Now, let me show you where the files all are. So over here, you can see under the DB Elite folder, under the backtesting, you have that over there.
Backtesting.
That's right. Yeah. So under DB Elite, under backtest. Okay, let me just go through this thing on with that. So if you go under Elite Systems. Yeah, so if you go under Vedanta Trading Elite Team, Elite Systems, End of Day Elite, and then you go on the DB Elite, go on the backtesting, then there it is, DB Elite Aggressive Master 2010. So if you open that up, and you can see all the GBP/USD dates that we should have entered the trade, yeah? So that's in there. And then under your name, I have put a GBP/USD DB Elite template.
So see the template, do I need to fill the template in it, or will I copy that?
Yeah, let's do a copy, but I'll explain to you using
Right,
the template
okay.
first, and then let's do a copy, yeah?
That's fine.
Yeah. So okay, so now going to the DB Elite template, so all it has is only GBP/USD in here. And what we just need to do is we need to have 2011 here. So let me just write on that tab GBP/USD 2011, and then what we got here is GBP/USD 2012. Actually, in fact, let me just copy this. So what you can do is move or copy this and copy the whole spreadsheet. So you see we got a duplicate now, right? And then we do it once more for 2013.
Brilliant.
And so there we go. And then we just rename it, basically. We don't need this anymore, so I can just delete that. Okay. So just let's rename this. So 2012. And then 2013. That's it. Okay, so we got 2011, 12 and 13. Now let's go through this. So all these fill-in dates, I think what Sandy has done is that he's made it into a standard format, which just shows the month and the date. That's it, pretty much. Yeah.
Yep.
So even if you copy and paste it, so let me just test this. I think because the formatting should work. Let me see. 15 Feb 2013. Yeah, there you go. So the formatting works. So it's formatted the whole thing basically. Right. So even if you were to delete those dates, the formatting should work. So let me just check this. So 10th Feb 2013. If you press enter, so it just goes back to the same formatting. Yeah. So the whole thing basically works. So what you got to do basically very simple. We can delete all of this. If you really want to do it simply, so that you don't type it in, go back to the master spreadsheet. You just copy all the dates from here, right? But the thing is, maybe this one. Let's see if one works or not. This format might not work. Let's see. Yeah, it doesn't. You need to have a slash in between. That's what it is. So what we could do, I think, quickly. Let me just do this. Just copy that, paste it. Okay, great. So if I just want to put just the forward slashes in between, and I believe that it should convert. No, it doesn't. Why is that? Let me just format it. No, it's still not working. Why? Oh, it's because it's 2013, is it? Yeah, there you go. So you need to put 2013 and then it starts working, yeah? Actually, it's not 2013, is it? It should be 2011.
2011.
I don't know why he's done like that. We need to check that. But it's okay, I think I tell you what, for now, even if it's in this format, it doesn't matter, as long as we know. We can change it later on, yeah?
Yep.
We can quickly change that. Let me just check this quickly. Okay, so we got the investors charts up now, so I'm just going to get everything ready. So, and this is 2011 is what we want to get to. I know we will have some missing data here. Right, gap down a bit, isn't it? 2011 looks to be fine on mine.
It's just the 4 hour you've got missing data.
4 hours, is it?
Oh, is that the 4 hour you're on? You're on the 4 hour?
Yeah. No, yeah, you're right, because over here is
Aye, there it's there.
after April.
It seems to be on them all, roughly around about the same.
Yeah.
Don't know why.
Okay, so there we go, we got that. So that's all ready now. Okay, good, so we can start now. Right. Going to the GBP USD template. Okay, now. So 17th of Jan 2011 is when we enter, yeah? So let's take a look at this. So 17th of Jan. So we got, currently right now is a downtrend here, isn't it? Isn't that right?
Yep.
Okay, tools. Let me see if I can annotate here. Annotation. Add system stem. Don't know what is this. Add. Caption. Don't know what it means. Okay. Doesn't seem like it can. System stem. What's that about? Not sure. Okay. Not pretty sure about this, but okay, anyway, so what we can see over here that this is a downtrend, isn't it? Is that right? Yeah?
Yep.
Okay, so now if we were to forward it further, going forward, we can see that it's now going further up, right? So therefore at that point you should also start thinking of a variation 1 breakout, isn't it? Right?
Yep,
so
variation 1.
Yeah, so that's why I have put it already there, but I have written most of the things anyway for you. But 17th of Jan looks like a variation 2, but doesn't matter. Let's see if it breaks it or not. Probably it doesn't. Yeah, it does. So 17th of Jan here, it's a variation 1. Okay, another thing is that I think I haven't copied off the from the master. You see, look at the master thing. It's all the variations all there, right? Yeah. So we need to copy it over. Have you got it written down?
Yes.
Oh, okay, that's awesome. Okay, that's good. Because I'm using Sandy's template because he did an Aussie. You see, that's what it is.
Ah, right, okay.
Yeah.
So it's going to be different variations.
That's it. Yes. Yeah. Okay. I'll tell you what. Oops. Let me just copy it over. Hang on. So just copy it all over down. Control C. If it go under here, Control V. There you go. That's it, done.
1541. That's the start. Yeah.
That's it. Yeah. So that's a variation 1 there. So that was correct. So we did have a break there. So of course, as usual, we would put the entry over here.
The high of the break.
That's it. Yeah, on the break of the bar. Now, how have I done it? Let's go back to the trend variations here. So let's take a look. HTTP Elite template. Let's go to the Crib sheet, what have I said? Wait for okay, enter live for confirmation of swing high. However, if bar is green, then we put a pending order. Okay, enter live on. Okay, that breaks the daily swing high or low for variation 1 breakout. Okay. Okay, so in this variation that I've put over here, we can just keep measuring that. Is that you wait for it to break the swing high first, yeah?
And that's what it's done.
Yeah, that's right. Yeah, and then you
Right.
and then you enter in live into the market. Yeah.
It's just a breakout, isn't it?
Yeah, that's right. Yeah. The variation one, we need to do a bit more testing, but for this backtesting that we're doing, we just keep it to this type of variation. That's it. Because as I've explained before in one of the elite sessions, there's 3 types of variation ones that could happen. But we'll do a bit more testing into that because you won't really have that much variation one. But we'll do that later on. That won't take very long. Maybe I can even complete that myself. Now, so anyway, in any case, so we are entering basically on the breakout of this. So we are entering on the close of this bar, right? Do you get that as of now? So let's see.
I thought we enter above the swing high of the one that's passed, away back on the red. I thought it was the entry and exit was up there.
The entry, yeah, that's right, yeah. So we wait for. So basically, in this variation we are testing, in the DB Elite, we wait for the high to be taken out first. Yeah. So now it hasn't been taken out yet, right? So right now it's taken out, isn't it?
Yeah.
Can you see? It's taken out already.
Yeah. Yeah, you can see it clearly.
Yeah, but we don't put a pending order for the high to be taken out. What we do is that we enter on this bar which took out the high.
Right, okay.
So we're entering on the close, basically. That's all we're doing. Everything in this variation, we are entering on the close, basically, yeah?
On the variation 1, you mean? Or
that's right, yeah.
On this the whole system, the V8 is odd today with a close?
That's it, yes. Absolutely right.
So when we do...
Sorry? Jim. Oops.
Theory?
Yes, I can hear now, yeah.
It disappeared there. It says internet connection problem there.
Okay.
Right, okay, so what we done the other back testing, it was to do with the high of the swing high and swing low. Do you know what I mean, wasn't it? The high and the lows of the swings.
That's right, yes.
So now it's the closes we're looking for.
Absolutely, yes. Yeah.
Right, okay. So what's the close there? What's the closes?
Yeah.
15896.
Yeah.
So do you put 3 pips above 15899?
Yeah, you see, you don't even need to do all that. That's why Sandy has done the spreadsheet for us.
All right.
So all you need to do now, so let's go through this example, yeah? So this is the bar that you would enter on, but you're entering on the close, right?
Yep.
So now let's take the close from here. So 15896, no?
That's
it. You don't even do anything. Just type in that 5896. So let's go to here and we type it in saying 15896. Yeah? And that is it. Everything else is filled up for you, but you can just fill up the high and the low. But you know, actually the high and the low, if you want you can, but I know there's a way that you can pull out all the high and the low data from MetaTrader. And then you can then copy and paste. I know Rishi has done a bit of that for his own testing.
He's a shark with computers.
That's right, yeah.
Mind, I'm a dummy.
Yeah, it's
I'll need to do it manually.
Yeah, I'm not as good as him as well. But so even if you don't want to fill that, that's really fine. I mean, we can find it later and copy and paste it basically. But if you want to do it, why not? I mean,
I'm going to fill it in just so I know.
So so in this example here is 5954. So we just put it in.
That's the entry.
Yeah. No, high. The high. 1.
Oh, sorry, the high.
Remember, the entry is already calculated as long as you put the close.
Right. Okay.
Because Sandy did it that way, yeah. And then basically the low now. Let's take a look at the low. And the low of that bar is 15834. Yeah. So 15834. And the most important thing is that under here you need to specify, under long and short, you need to specify whether it's a long or a short trade.
It's a long, isn't it?
Yeah, that's right. Because if you don't, then the formula changes. Yeah. Because he's designed it such that if it's long means you should take the low of the bar. If it's short means you should take the high of the bar as a stop loss. Yeah, makes sense, isn't it? Yeah. Right. Okay. Now the only thing is, sometimes the formulas are not really that standard, because what has happened over here is that we are taking every single trade as the low of the bar as a stop loss, isn't it?
Yep.
But of course you and I know that, but if it's below the ATR range, we need to look for other levels.
And how do I find the ATR? Did you need to put the ATR up? Because I've not got it on my computer yet.
Yeah, that's right. But you know the ATR basically means that over the last 10 bars, is it really a small bar? You see, just by visual we can see that this bar is very small, isn't it? Right?
Yep.
That's a Sunday bar really. But if you can see something like this insider bar is quite small as well over the last 10 days. So things like that, I won't put my stop loss at the low of that bar, right? Because of volatility I can get stopped out.
But that's quite a big bar that we're on now.
No, this one here, the 17th.
No, I know. But I'm talking about the entry bar, innit?
This, yeah, that's right. Yes. So this
I
one,
see this.
yeah, this
on you
one,
go.
yeah, this one is fine. You're right. We just put it for the low of the bar. It's fine.
But that's what I'm saying. Where do you find the ATR for that? Is it got to be going to the bottom of that graph and hold your cursor over that?
Yeah, what you do is you go to insert indicator. It's pretty.
No, I can get that on it because I've already done.
All right.
That on. That's what I mean. We'll see if to find the ATR of that bar.
Oh, right. Is that what you're
put
asking?
your cursor on at the bottom of the screen.
Yeah, let me show
That's
that.
what I mean, and that will tell you a level, right? That's what I mean.
That's it. Yeah. So if you go down there and then you bring down your cursor to the ATR, and then it will show you, see 0.0118. So that is 118 pips. That's it.
Right. So how does that relate to what we're looking to do then? If that's 180, you need to calculate for the
No,
entry.
basically then what you do is that go back to your spreadsheet. So over here you can see that, look at this, the number of pips of risk is only 65 pips though. Right? But then, okay, let's see the high and the low maximum pip. No, it's not having that. So yeah, number of pips of risk is actually lower than the ATR range, right?
And we don't want that.
Yeah, but you see, the thing is, what we really need to compare is between, so this could be a volatility. Also need to compare the high and the low, 5954 and 5834. Right? So the whole range of that bar is basically 100 something pips, isn't it? So it does fit into the ATR, it's just that this one here is just a bit below. I tell you what, to keep it very simple, just keep doing it for the low and the high of the bar. Forget about ATR and all that. But what we could do though, if you think that it's below the ATR, then what you then do is that you just put a red indication to it. Yeah. Do you get that?
I thought we were to take it on the close, so is it just the high and the low now? Or not the close?
No, it is the close, right? So
Right.
So everything the spreadsheet is doing for you, no? So if you enter the close, it will start entering you in, that's it. Yeah? The stop loss will be decided on the high and the low of the bar.
Right.
But the spreadsheet again will do that for you. The only thing I just was mentioning to you extra was that, of course, when we're taking it live sometimes, and you will see this in your backtesting, is that sometimes for insider bars where the range is very small and below the ATR, we won't really put our stop loss below the low of the bar. We would adjust the stop loss
to the ATR.
Yeah, to the ATR, or I would look at maybe shorter time frames. Look for other support resistance levels where I can put it a bit more higher place or lower place where we would not get.
But what is the parameters we're looking to put it away for it then? If that's too tight, right, the one you've got your cursor on, if that's too tight, right, what are we looking to put it on it. Say the ATR was 100, and that's less than 100.
Yeah, let's say this
You
one
go
was
with
only,
ATR.
yeah, let's say this was 50 pips. So what I would do then is I would then start looking at maybe, this is what I usually do, right? I would start maybe looking at maybe the last bar that made the high. Maybe I would look to put for the low of that. Or I would go on to a 4-hour time frame and look at maybe near swing low and swing highs on a 4-hour on this move up. Yeah, so things like that.
So that's what I'm saying. How do you determine it's too low? I know visually you're saying that's too low, but is there a parameter? Is it like
ATR.
50 pips is way too low?
ATR.
No.
ATR.
So anything below the ATR is too low.
That's right. Yes. Usually, Jim, we need. I think a very safe side for us is about 100 pips of risk.
Right.
But we don't want to
so
go.
I know.
Yeah, we don't want to go too much above like 170 as well. I don't want to do that as well. So our nice sweet spot range for daily trading is about 100 to 150.
Right. But you would go to 170. I says.
Yeah. Ideally, I wouldn't want to.
Right. Okay, so we're going to go parameters between 100 to 150. Yeah.
Yes, 100 to 150. But as I said, for this exercise, just do it according to the spreadsheet. Forget about whether it is lower than ATR or whatever. Just mechanically just fill up the spreadsheet. But whichever trades that you think you shouldn't have put the stop loss there, then you just put a red mark next to it. Yeah, that's it. Just highlight it by a red color, the number.
Right. So we're going to use the top. Well, for the stop loss, we're going to use the low of the bar. Yes.
That's it. Yes. Yeah.
Right, and we're going to mark it in red if we think it's lower than if we know it's lower than the ATR.
That's right. Yes.
Where do we mark it in red? What at the end? Aye.
Yeah.
Where would you put the red mark? Just a red cross anywhere? At the beginning, that's what I'm saying. See, like it says like.
Yeah, just put it at this number trade. Here. Yeah, put it at the number. Yeah.
Well, that means that's so you know.
That's right. And then you know what you do? If you want to write comments, you go to the far right-hand corner of the journal.
Right. Okay.
And there's a comments column, and just say, you know what?
Low ATR.
Yeah,
lower than the ATR.
Yeah, lower than ATR. That's it. Yeah.
Right.
Pip risk lower than ATR. You can also do it even for trades which have hit target and trades which have also stopped you out. Yeah. Right.
So the column there, is it maximum drawdown before initial stop loss?
Yeah, we'll come to all of that very soon. So the next one, so we've entered the close, the high and the low, and the spreadsheet is entering our orders in and our stop loss in. So let's now take a look. So now let's say we entered at 15898. So let's go through that. So high is 15896. So 15. Yeah. So we entered in live on this. So let's take a look. And the low was for this bar. So now what have we done now? So the next bar does take us up. Now what do I want to know about the maximum drawdown is that did the trade go further below than my initial stop loss or not, basically. That is what we are looking at, yeah?
Well, it didn't, did it?
Yeah, it didn't really, yes, that's right, yeah. Let's see if it hits our stop loss or not. Let's see. So, according to this, so this would be the first bar that broke the high. Then this is the second bar, right?
Yep.
Let's just take a quick look at our target. And we need to measure our target, isn't it? So let's see. So we do a Fibonacci 150, no? That's what we're looking at. So we need it on the upside. So there we go. So this is variation 1, we only need 123.6. Am I right to say that?
Is it 123.6 in?
Yeah,
or is it variation 1?
For variation 1 we only need 123.6. Yeah. Let me show you on the crib sheet.
I'm looking for it now myself to see it.
Yeah, so you can see under the exit rules for exit and target of 150% expansion. From last swing high to swing low for variation 4 and 5 setups. For variation 1, price structure failures and break variation 1, 2 and 6 exit at 123.6% fib level. You got that?
Yep, price structure failure break 1, 2 and 6 exit 123.6 level.
Yeah.
Okay.
Actually, in fact, 1, 2, yeah, the one also is trend confirming, isn't it? Yeah, that's fine. Just do it that 1, 2 and 6. Yeah? Okay. So right, so we got that. Okay. So in terms of this one here, so let's see where the 123.6% level is. So it's 16040, yeah? So that's what we would do. So 16040, we just type it in. So target here, so 16040. So it's 142 pips of target, right? Got that?
Yep.
Yeah.
Yep.
Okay. So it's got some formulas here. Okay. So maximum drawdown before initial stop loss. So let's see, before initial stop loss is hit, if we kept
It's obviously hit a target, so the exit price will be the same as the target, innit? 16040.
yes, that's right, yeah, you're right about that one. 1604. Okay, that's good. So we got 2.18% there. Now let's take a look at maximum pip drawdown and DD. I don't know what he has done here.
Maybe we need to type it in that box.
No, we don't need to. It's just a formula
Alright.
there. Maybe this one needs. Okay. So he's done one here. So pips risk. So 1% DD drawdown fraction. Maximum drawdown before initial stop loss. So we didn't really have anything here, did we?
No, because it just went straight up, so if you leave that blank, does that... I don't know.
Put 0 here.
Right, okay.
Then it goes haywire after that.
Don't put 0 there.
Yeah. Let's see what we could do. Close. Let's see what if we put the same numbers. Yeah. I think what we do is that if there's nothing, then we just leave it blank, isn't it?
Well, see the maximum drawdown. It'll be the low, would it no? Because that's the lowest point it went, was the low. Or is that no right?
Say that again. Let's go to the chart. What do you say?
See it says maximum drawdown?
Yeah.
That'll be the lowest point it ever went to, will be the actual low of the bar that's triggered. No?
Yeah,
Because that's the lowest it went to.
Yeah, you're absolutely right. That's where the stop loss is.
Aye, so if you punch that in that, but it says maximum drawdown of the low of the bar, does that change?
Yeah,
it just
gives you 0 basically.
Alright.
So
did you just do that? Did you put the low in? 15834?
let's just put that 15834. Yeah, you're right. So it's 0.98% draw. Yeah, that's pretty much what we want, isn't it? That's the maximum.
Aye, because that's where that was the lowest point it was at then.
That's
to hit your target, wasn't it?
That's
right. That's what you need to put the low of the bar in then.
That's right.
That particular trade, that's what I mean.
Yeah, good point. Yeah.
Right, okay.
Okay, so we got that. So for the ones which hit your initial stop loss or doesn't hit it, then that's you just put it for the low of the bar. That's pretty much it, really. Or the high of the bar, whatever way. Yeah.
Aye, whatever way you're going.
Okay, so we got all that filled up. Now the last part we need to fill up is the maximum the trade ran, isn't it?
Which I've already done that and the other stuff, so I should find that easy enough.
Okay,
which would
so
be
let's go through
top
this.
of that bar.
So let's say if we didn't have any target, let's say we kept trailing it. So this is the first bar, this is the second bar. Then this is the third bar, no? Then now we get stopped out. So this is the highest it went, right?
Yep, which is 160.059.
Yeah.
Sorry, 60.59, aye.
Yeah, 60.59. So let's put that in.
160.59.
Okay, that's good. Sandy has covered that as well, like the actual price and everything. That's very good. So you don't even need to calculate spreads and everything. You just put that, just put it as of from the chart, and then the spreadsheet will calculate for you. Yeah. You get what I mean, right?
Yep. Well, I'm not touching it. I'm just going to fill in the figures.
Okay, that's good.
You know I'll not touch it, Theodore.
Okay, that's good. Yeah. Now the maximum swing high that it went to. So that one is quite obvious here, isn't it? This is the highest it went to, right?
It's the same number.
Yeah, exactly. So this is good in that sense, which is for this particular trade, it looks like our system has worked perfectly. You know what I mean?
That's curve fitting. if only.
Oh, yeah, exactly. 16059. Okay, 16059. There you go. So 16059. Oops, there's no. So we need to copy the formula down. I think he hasn't copied the formula down, right? So let me just copy the formula down. Okay, so we got that now, right?
So will that automatically just change them itself while I'm trying to copy it down?
No, I've copied it down for you now, so you don't.
Right.
Sometimes if anything, sometimes if something doesn't work, you can just check on the blue box. You can see over here if there's any formula or not. That's all you need to check.
Right.
Yeah?
Okay.
But if you don't do anything to it, you all should be fine anyway.
Exit price over the target price, wasn't it?
What,
exit with trailing stop loss.
Yeah. What we can do to be safe though, I will keep this as a template. Then I will do a copy of it. Then you can keep filling on the copy just in case anything happens. You can go back to the template.
I leave this as it is, and I'll copy another sheet.
That's what I'll copy it for you right now. Anyway, after I've done the three examples, yeah.
I'd have asked my wife to do that anyway.
That's awesome. Now the last part is exit with trailing stop loss. No. So let's say we don't have any target. So the first bar, second bar, third bar. So I will trail my stop loss here. No.
Yep.
So the low of that
is the next day they've been taking it.
That's
so
right.
You need to.
So 15944, isn't it? The low, yeah.
15944.
Yeah, forget the last digit, yeah? The last decimal.
Aye. I know it's only the 4 for the points.
That's it, yeah. So 15944. 15944. That's it. Everything else is done for you now. That's pretty much it, man.
Then the comments is pit risk lower than ATR.
That's right. According to this trade, it looks like our manual exit at 123.6 level seems to be the best. Yeah. You get
the one rather than the 150.
Yeah, no, rather than all this 2-3%, 4%, 5%, basically.
Don't use the percentages, but just use the Fibonacci. You mean?
Yeah, you see, there's two things happening over here, Jim. Yeah. The one that we are manually putting the target in, yeah, is based on the Fibonacci extension. So it's more or less what we are really looking to do here in this column, yeah, is that we are looking at the best manual kind of discretionary exit that we can get. This is why I'm using a Fibonacci extension. So because by logic, yeah, because you know, whenever you have some kind of a logic, but you need to test it out to build your conviction, no?
Right, rather than just going for a straight 2%, you're doing it with a Fibonacci, the 1, 2, 3, or the 150.
That's right, brilliant, yeah.
Right.
But at the same time, I also want to measure it against an arbitrary exit point.
So you're still using them as well, just to see?
That's right, yeah.
Right.
Spot on. Yeah, so that's what we are constantly looking to do. Yeah. So we'll see whether our logic actually beats at least the 2% exit target, you know. But if it doesn't, then maybe we need to increase our Fibonacci extension points. You know what I mean? That's what the conclusion. That's what we're looking to conclude all of this.
If it wasn't making the grade, then I mean, if it was lower than all the percentage rates, it wouldn't be worth. You'd be looking back to the percentage rates, wouldn't you?
Absolutely brilliant, spot on. Yeah.
See on the can I ask you a question now?
Yes.
Well, right. See on the crib sheet where we looked at it says price structure failure, variation 1, 2 and 6, do the 1, 2, 3 fib level.
Yeah.
See above it says variation 6, 2 reversal breakout. That says use 1, 2, 3. The setup is 2 to 1 reward risk ratio. Is that's the same trades in it? Well, obviously 1, 2 and 6, then it's 1, 2 and 3 out there.
Okay, let me just quickly check that.
I think I've got it split page. I think maybe I'm reading something different here about that. Target fib 150 expansion for last swing high at low for variation 4, 5 setup. For variation 6.
Okay,
and
so
2 reversal breakouts, for example. Right. You've got a wee star next to it.
oh yeah, 1, 2, 3 star. You know what? For now, just keep it all simple. It doesn't matter all these things. We just go for variation 1 and 6. 1, 2 and 6. We just go for 1, 2, 3.6 pip.
Right, so see that where it says that 2 to 1 word ratio and 200 fib expansion, can I just put a line through that then so I don't use it?
Yeah, don't use it. I mean, this is all later on when we go through the trades. We can, because you see, when you're testing it, you definitely will start observing so many things from the market. You know, and that is why I came out all these kind of things to improve
Right.
our results according to market movement.
So all the other variations is 150, is that true to say that?
That's right, yeah.
Right, okay.
I think, you know what, in fact, if you want to keep it simple, just say variation 1 and 6, just do 1, 2, 3.6 level. Forget the 2 as well, take out the 2.
Okay.
And then that is it. Just get some raw results, and after that, what I want you all to do is that, because you only got one currency, and then you just go deep into the results and start doing your research.
Right.
Yeah?
Right.
And what
So
you've observed so far.
1 and 6, and then for 2 to 5 becomes 150.
That's it, yeah. Let's keep it simple.
Oh, I like that word, keep it simple.
That's right. Okay. We can optimize it later. You know, the thing is,
Because this is what me and Sargent were getting confused about.
Yeah.
We basically spoke about this. There's just too many different bits to it.
yeah, it doesn't, because we know what we can
It's
just
alright you and analysing it because you know what you're looking for.
Yeah, that's
and
right,
we
yeah,
don't.
yeah.
And the boundaries.
because
and I know when you're analysing it, you're looking to see where's your tighter stocks, where's
that's
your wider
right, yeah.
spreads.
Because you know, once you
So
get the raw results, we can do the optimization later on. I can even just look through the results and start doing it.
Right.
But you guys will start picking it up once you do that. But let's keep the first raw results simple. I think that's the whole key. And then
Right.
after that, then you take it one step deeper and deeper inside. But as you are looking through it, and you start making observations. Once you start making observations, just start writing into the comments column. That's all, pretty much.
Mm-hmm.
But remember, one thing is that it's never one trade. It's always cumulative. Yeah, we need to go.
No, I
past
know
it.
that. I get that.
Yeah.
It's not just one trade. It's an accession of trades, isn't it?
Yeah. You know, of course, also another thing also I must tell you is that it is maybe it is in human nature that we always are striving towards as near to perfection. So therefore, similarly in trading, it is very similar concept, which that is always a trader's aspiration to keep optimizing a system so that it is as highly adaptable to the market as much as possible.
But constantly changing it, you mean? Constantly manipulating it?
No, it's not.
Or
You
is
don't
it-
manipulate. It's optimizing it based on
Right,
momentum.
optimising it.
Optimizing based on momentum. Yeah. So you see, as long as you can get as near as possible to catching 70% of the move, most of the time, that is it. You got a very fantastic system.
But you see, if that only lasts for 20 trades and changes, you need to optimise that again, yes?
Oh no, not really. It's
No?
as long as 70%, right? 70% of your trades are catching 70% of the move. I think you got a very good system. Or even if 50% of your trades are catching 70% of the move, you got a phenomenal system, Jim.
Right. And you just actually just keep trading them mechanically.
That's right. And also it comes down to your expectancy as well. On an average, if each of your trades is making about 1% or even 0.5%, you got a phenomenal system.
I know 1.5 obviously percent is a good system.
Yeah, but remember that 1.5. You see, there's a lot of things to do with stats. You see, 1.5% is based on the winning trades. But if you were to average it out, so for example, if you took 30 trades, yeah, 15 trades, let's say, lost. Let's say 15 trades won.
That's half.
That's right, 50-50 reliability. But let's say the winning trades, The 15 trades
Or
that won,
1.5.
yeah, let's say it's an average of 1.5, yeah, to 1%. Every time you risk 1%, you got 1.5. But remember that 1.5 to 1 ratio even decreases further if you averaged it out throughout the 30 trades. And why would you do that? Because all I'm saying is every time I place a trade, I'm making an average of about 0.4%. So basically, if I put 30 trades on, including all the losing trades, I will get an average of 12% profit. This is what expectancy means. When K-Top explains about this. So basically, all it means is that after placing 30 trades, if you made 30% profit, yeah, means all it means is that on an average, you're making 1% a trade,
Right.
including the losing trades.
And what is your expectancy of making off the trade? It's over 1%, isn't it?
No, expectancy, man, to get over
No.
1% is really very a tricky point.
Right.
Yeah, but if you can, I would say it's one of the best systems ever. Because, think about it in a mathematical standpoint of view, it is almost probably impossible to get it more than 1%. It's only possible though if 80% of your losing trades are less than 1% hit. This is why the game always comes down to also making sure, this is what Venkat Tops also says, is that if you put on a trade and if it hits your 1% loss, that's actually a bad trade, he says, because most of the trades that you enter should actually run a bit and you should be able to trail your stop loss.
It's not about the winning ones, it's about managing the ones that are going to hit you 1%.
That's right, and also locking in your profit so that you don't lose too much as well. If you sit down and work on the number, you will understand this based on the stats. So the trick is to increase your expectancy is to reduce the amount of losses per losing trade that you're having actually. Because think about this, if you won 5%, yeah, and the amount that you lost is 0.4, okay, so now it's 4.6% net profit, isn't it?
Yep.
So now 4.6 percent. So let's just do this. So 5%, you got it for 2 trades, and then you got 0.2% for 3 trades. Let's say 0.6. So 5 minus 0.6 is 4.4. So now 4.4 divided by 8, you're getting 0.55% profit per each trade.
Just over 0.5%.
Just over 0.5%. That's right. But that's provided depending on what ratios that you're having. But think about this. But if each of the trades took a 1% loss, your 5% profit is minus, take away the 3%, it drops to 2% now. And 2 divided by 8 is 0.25. So you're only making 0.25% profit now.
Right.
The only way to increase your expectancy is by first managing the amount of really loss that you're having per trade. So your key really is not to lose 1% a trade really.
Aye.
As much as you can. I mean 20%, as long as you can make it 20% of the time is your bad trades. 80% of the time you're not losing 1%, you got a very good system. Always keep following the 80-20 rule, you'll be fine. At the end of the day, Jim, if you got a system which can make you at least about 15 to 30% a year, and on top of that, in a crash, it can escalate up to 70-80%, and that's it, man. You got a phenomenal system. Money will never be a problem for you, man. Money will just fall at your lap.
That's what I'm saying. If you get 20% a year, you're doing well.
Exactly.
It's just as if it's a big money, it's major money. I mean, 20% on a wee account's nothing.
That's right. So this is the first trade that we have done, so you understand that, yeah?
Yeah, I think I've got it. We'll just go through another one.
Yeah,
if you get time.
Yeah, we'll go through 2 more, yeah? We'll go through 2 more.
Right. Just to make sure I get it all.
So now you got this, I added 1 more column for you, 2% as well, so that will automatically calculate for you as well, yeah?
Right.
So if I had a 2% target, I would have hit my 2%, because the maximum the trade ran was 2.48%, wasn't it? So if I had a target at 2, I would have hit my target there as well.
Yep.
Okay. Now, but unfortunately, it didn't hit the 2.5%, so therefore you only got 0.71% based on your trailing stop loss, yeah? Okay.
Because we used the 1, 2, 3.
That's
Fibonacci.
Right. That's
right.
right, absolutely. So that.
Still good.
Yeah, that's right, yeah. So, that's what we got so far. So, based on this only one trade, it looks like our 123% fib expansion looks to be the best target, basically, isn't it?
Yep, because it's 2.8.
That's right, yeah.
2.18.
That's right. So now let's go on to the next one. 31st January 2011. Now, so we keep going. So this is a swing high now. So this is an uptrend, right? So we got a variation 5 basically.
How do you know it's a variation 5? I know, because you've not moved the screen.
Oh yeah, that's right. Yes. Good point. Yeah. So we got a variation 5 now. Right? And this bar is probably going to get confirmed on which date? Let's look at the spreadsheet. It's going to be... Okay, I didn't fill up the exit date on this one, so let me just go and fill this up. Exit date was on the 18th of January, yeah? There we go, yeah? Got it? That's the first one. Now, 31st January, this thing gets confirmed. This swing low that I've put over here gets confirmed on the 31st of January, yeah?
Right.
So let's keep moving up, moving forward.
So we're looking for a bar that goes below that.
27, 28, 29. 31st January, there you go, yeah? So 31st January, we got a very big, massive bar. Yeah? And we have the swing low confirmed as well. Got it?
I can see that, but it's a variation. I'm looking at it saying to myself, how does that look like a variation 5 to me?
Okay.
Is that a variation 5?
You tell me, what do you think? Why would it be a variation 5? Or if not, what variation would it be?
Well, judging on the last 4 swing highs and lows, that's done. That's a 4, a 3.
A tree is an extended market compression, right? This is not a compression anymore. It's a defined trend, right?
Oh, that's because it's higher, right? Sorry, I see that there now.
So once it's an established trend, it can only be 4 or 5, no? So what do you think it is?
Well, I've got it here as a 5 because you've told me it's a 5, but I'm looking at the 5 and I don't see that the same as what I've got on the sheet.
Can you look at the screen? So if you look at the screen, why? How does a 5 look like?
It's got higher highs, higher lows, then it drops off a lower high. It forms a lower low. I don't see that on there.
Yeah, but that's on a downtrend. This is on an uptrend, right?
Right, sorry. To break that. It's got a higher high, a higher low. Right, aye. I see that on there.
Okay, you must.
Then we're up again.
Yeah, that's right. Yeah,
right.
You must know that variation 5 is immediately formed after a variation 1 setup.
It's a 5 because I can see that now because looking at it.
Yeah, because it broke the last high here, right?
Yep.
Can you see that? Broke the last
high.
So you went up and then you went back down. Then now it confirmed the swing.
It's higher highs, higher lows.
That's it, but it's a variation 5. That's all.
And it's a breakout of the higher high.
Yeah, no, it hasn't broken out this high yet. But it's confirmed the swing low though. Got that?
Alright, on the date, because you gave me the date saying that's the date it's confirmed.
That's right, spot on.
Today with the Algos, because we don't have that, right?
That's right, spot on, Jim.
Right, okay. Right, okay, I get it now, because you're looking for something I've not got.
Brilliant, yes, yeah. That's why I gave you all the dates, right?
I know. Aye, because I would never find it without it.
That's right, yeah.
Right, so that's the confirmation day, is the 31st, that's the big bar.
That's right, yes.
So the next bar must, well, I don't know what the next bar is till you move it.
Absolutely. So before we move that, let's fill in all the data, yeah? So now we can look at this, which is now... let's take a look at this now. Let's go back to the spreadsheet now. Let's see, GBPUSD, DB Elite. Now, 31st Jan. Okay, good. So variation 5. So we need to enter this long, right? Let's not forget that because the formula won't work. Now, let's then put in all the close and all that thing. So close now 16025, no?
Yep, 160.25.
Yep, so let's put that in. 160.25. Then we put the high and the low as well.
160.48 for the high.
160.48. And then we then put the low, which is 158.23, yeah?
Yep.
There we go. We got 205 pips of risk. Which is quite a lot, isn't it? But this is what we won't usually do it, right? Yeah?
Aye, you would try and
I would probably
move
go
it to
and
the swing
that's
before
right.
other stuff.
I would probably go to and put it tighter. Now let me ask you, right? Let's say if you were to take this trade, where do you think, just looking on the daily chart, yeah, where do you think you would put your stop loss? Where can you make it a bit more tighter?
On the see the confirmed swing high.
Yeah.
The bottom of the bottom of the swing, the confirmed swing high.
Yeah, that's it. Yeah, this one here. Yeah.
Yep. Yeah.
So you put it below low of that, right?
Yeah.
Yeah, good point.
15944.
Yeah.
Oh no, it's sorry.
So
it's
let's put the
moved,
low. 15894. You're right. Yeah, absolutely right.
No, 15895 it is.
Yeah, that's right. Yeah, but you would just put it one pip below, but doesn't matter. But the spreadsheet will do that for you. Now,
so would you put it to that as a testing, or would you just go with what it is?
no, I tell you what. For this one, we just keep it simple all the way, isn't it? So just go with the spreadsheet, I think. Yeah.
Right. So the spreadsheet would be below the actual bar, then, wouldn't it?
Yeah, that's right. But what we're going to do, though, Jim, is that I'll show you now. But we put a red mark next to it. Yeah.
Right.
I will show you what I'm going to do now. Yeah. And then,
Right,
and
okay.
then you will know what to do next. But I think to keep it simple, we just go according. It's strictly mechanical. Yeah. Okay. So so you either put the low behind this bar. What else? Okay, I teach you another one. What else you could do if the bar is very big, yeah, right? What you do is you do a fib on that bar itself. Okay, so
50% of the bar.
that's right. So we don't really usually 50% is a bit too tight. So if I were to put it here, what I would do is I would see if it matches up with some fib or not. If I were to put it below in the low of this one, which is 5894, yeah, that comes under 78.6, isn't it?
So you would move it up to the 60.
No, it's below the 61.8 level. That's what it is. So maybe you could even put it below 61.8. The best thing to do is you put behind two levels of support and resistance. That's the best one to do. So if I can have a 4-hour one as well supporting this, then that's the best thing. So let's go under the 4-hour. Let's see if we can find anything or not. 31st of Jan 2011.
Ask if we get the data.
Yeah, no, I think it should because it's there until April. That's what it is. So 31st of Jan. So there we go, right? You can see under here. So let's go under here. So there we go. 31st of Jan is under here. This one here.
So would you put it where the dot is, where the swing low is?
Yeah, where this one is. Can you see this one here?
Yeah.
Yeah.
So what's the swing low? Is 158.21.
Yeah, 158.21. Yeah, brilliant. So that's what we got. And let's go and take a look at the one that you have, which is the low of this one here. 158.94. So you can see that that's much more higher, no? So 158.21 is too low for us. I think it would be too much. So it's basically the low of that bar, basically. That's what it is, yeah. Which is 205 pips of risk. So I wouldn't do that. So I think our best bet really is for the low of this bar, 158.94.
So if I'm following the spreadsheet and we get over 200, I'll move it to the low of the bar. Yeah.
No, what I want you to do is this. What I want you to do is this, right? In terms of the spreadsheet, we would just put it accordingly. But what you do is you put a red point next to it, mark it by red, and go under the comments, and then say oversized bar on entry.
Right.
Have put my entry on that particular level, which was 15894. Is that right?
Right, okay.
Yeah.
Yep.
Which is the low of the swing high on the 18th of Jan 2011.
Did you take a pip off it? Or did
No, you
it's
don't need to
9.5,
do
isn't it?
that because the spreadsheet will do that for you,
Right,
no?
right.
Which
Well,
is
it's 9.5, but
which is the link of the swing
right,
high
okay.
on
Oversized bar on into put. Right, okay.
18 Jan 2011. That is it, yeah. So you're right, yeah. 5895.
Did you put the date of the bar as well in, just to make sure, right, so you know exactly what bar you're talking about?
Because you know why I'm putting this in? Because later on when we revisit it, yeah, you just
Right.
zone in on just all the red ones. You edit all those figures and then we start comparing.
Where do you change the colour, Theo? How do you change the colour actually in the spreadsheet? I've never seen where you done that. I know you went up at the top there, but where was it?
Well, that's pretty simple. It's over here on the top. Can you see? The A.
The A, the coloured A?
Yeah, then you just
Right, okay.
click on the drop down arrow here. Then you just
Right.
follow. If you want to
Right,
make it a
okay.
bit more thicker, just put bold. That's it.
No, just one at a time, come on.
Yeah. No, the bold is simple, isn't it? Just bold, yeah. Make it a bit more thicker, that's it. It's bold. You can see the B over here, right?
Right, okay.
Yeah, bold. That's it.
Bold and red.
That's it. Yeah, that's that. You can choose another color if you want. It's up to you.
No, keep it simple.
Yeah.
Keep it in red.
All right. Okay. So maximum drawdown. Let's look at the maximum drawdown. Oh, before that, let's look at the Fibonacci. What Fibonacci we got? What is the target we got? So this is what would you do? 123.6 or 150?
This is 5, so it's 150.
That's it. Good point. So now you do it in such a way that you get the 150 on top. That's all. So 150.
It's 1.6. So
Oh, okay. This one here. We shouldn't be taking that one. We should be taking from this swing high to this swing low.
is it always the previous one?
Yes, that's right. Yeah, it's always the previous one. Yeah, good point.
Not a confirmed swing low because we were right, okay.
So 150 is a bit far off, but it doesn't matter. 16416, yeah.
Yep.
So we go and enter that into the spreadsheet. So 16416. Okay. So we got all of that now. Actually, in fact, do we even have a drawdown? Yeah. Do we even have a drawdown? Let me just go back on the last one. No, we don't have a drawdown. Yeah, that's right. That's why you said just put the low of the bar, is it?
But that's we're doing a long into now, so at the end of the bar we've got to push it along to see if it went true, isn't it?
Yeah, let's go up. Okay, so it didn't.
It did trigger.
Yeah, it did trigger us.
Mhm.
So let's just keep going. So that's your first bar already broken the swing high, no? Remember that once it breaks the swing high, that's where the count begins. Yeah, 1, 2, 3.
Yeah.
Right.
So that's the first bar.
Yeah. 2,
1, 2.
3. No, this is not 3. So
Because it's a red bar.
what's the high of this? So it hasn't hit our target yet. No, isn't. So that's your third bar, right?
Mhm.
The thing that we don't know is, has it hit our swing low or not on the 4 hour? Probably not, because that was a swing low. Let me just go and check it again. So 31st January.
No, it hasn't, because if they even had done it in that one, it'd have been still above it.
Oh, is that right?
Mhm.
Yeah, you probably didn't. No, we did have one small one here. Yeah, we did have one small one here. Can you see that?
Yeah.
The second of
So
that.
what's the low of that? 161.41.
Yeah. But once it let me just go back to the crib sheet. Let's see what our swing low is.
See, when it breaks above, I thought we don't use the 4, we just use the swing lows. The 3 buyer bars. So we really shouldn't be using the 4 hour for that then, should we?
Yeah.
To move the stop
Yeah,
loss?
but very good point. So we don't.
So it's because it's broke out, isn't it?
That's right. Yes. Yeah.
It's if it's under the breakout when it's confirmed.
That's right, yes.
We'll use that, so we don't need the 4 hour on that then, don't we not?
That's right, good point, yeah. So we don't
Right.
need that.
You confused me in the theory.
Yeah, I was just taking a...
Does it take much? Was that a test?
That's a good point. So our initial stop loss is still under here, that's fine. And what I would do though... Yeah, I will probably put it on the 50%, but that doesn't matter for now. Just do this. Just keep it simple. Just
You
do
need to do it the third bar, which is the one after the Sunday, the Monday bar then, isn't it?
That's
You
right.
need to move your stop loss to that.
Yeah, so for now, you know what? Just keep it simple.
Mm-hmm.
So every 3 buy bars. So this one here, you would trade a stop
So
loss.
we'd have moved it to that.
That's right.
So what's happened to the next bar?
Yeah, so 16089, wasn't it? Yeah? And then you would have been stopped out. Yeah?
Right. So that is the exit day then.
That's it, yeah.
Because the next day you'd be out.
Yeah, so 16089. There we go. So we are 61 pips of profit, yeah?
Mm-hmm.
And now let's take a look at the maximum pip drawdown. We didn't really have any drawdown here, did we? No. Because...
No, but he classed the... No, because the bar's taking you... No, well, the drawdown is the red bar, the Friday bar then, isn't it?
That's true.
That's what
This
it's
one here.
No, that's that's not a Friday, that's a Tuesday bar. So that's Sunday.
This one.
That one there. That's the drawdown then, isn't
Yeah,
it?
you're right. But did it go down below 16035?
Why 16035?
That's the low
Why?
of the bar, no?
The lower of the bar is 16035, but that is the drawdown, isn't it? That's the lowest drawdown.
That's right, yeah.
Aye, 16035, that's what he's looking for.
Yeah, so let's put that in. So 16035, isn't it?
Yep. Rank column.
Oh, here, yeah.
That's it.
16035. So there we go. We had an 8 pip drawdown, basically. Is that right?
Where's the entrance? Would be the close would be 16025 and 16035. No, that's 10. How's that?
No, actual fill was at 16027, wasn't it? Because of the spread, yeah?
Yeah.
You need to look at this column, actual fill.
That is it. That is it. That's right. Well, 35 and 27, there's 8, isn't it?
Yeah. But you know what? Yeah, but it's not actually a drawdown, Jim, because it was above your entry point, wasn't it? It's a long. So it is...
So, would you leave that as 0 then?
No. It was actually... It didn't actually even go to drawdown. It doesn't matter. I think we can just keep it. Yeah, so it didn't even have a drawdown, isn't it?
Well, still, it was in the trade and it went low. That's the lowest point of it when it was in the trade. So that's still a drawdown, is it not? You think as a drawdown is just takes you out, you mean?
Yeah, but it's a small... Maybe you're right. Maybe you just keep it like that because it's the smallest... It's the biggest... No, it's the furthest it went down, isn't it? Is that what you're saying?
Within the trade before we get stopped out? Or your target?
Yeah, that's
Is that
right.
what he meant?
Yeah.
Is that what he means by that? Is this what was discussed? Is this what he's... I don't see what difference it makes putting in or no, but 0 drawdown, would you put the entry price in then? No, because then that's taking it down as if it's... No.
Yeah, that's the thing, you see. So maximum drawdown, there was no drawdown at all, wasn't it?
So just take that figure out and see what happens.
Let's put 0 here and see what happens. Yeah, it just gets a bit skewed because the formula, isn't it?
So, for 0...
So should we just put the entry level then? Once...
No, because then that means that the drawdowns come down to the entry level then. That's you showing it's... then that's showing 0, 0 then, isn't it? That's no giving you the true figure.
Then there was no drawdown. Maybe that would make sense. What do you think?
I know it makes sense. Is it, Is it worked on that? Perhaps.
Because if I put 16027, that means all under this column it says that there's no zero drawdown.
Ah, that's what I'm saying, because it's equal.
Yeah, I think that's the way we do it then, isn't it? What do you think?
As long as it's right, okay.
Because what we wanted to reflect is there was no drawdown, wasn't it?
Basically.
That's it. Yeah.
Aye.
So the
So zero means it's equal, right?
yeah, I think that's the best way. As long as you all understand that. And then if you go back to the second trade, which was 17th of Jan, right? So that one also it didn't go below the entry point, did it or did it not? No.
Where are we? No, I think we did we know? Let's see.
No, it hit the target, didn't it?
Aye, so that should be.
Zero as well, right?
So you need to put the entry point in and that in as well then.
Actually, shall we do it until the point where we trail the stop loss? Yeah, I think we should do that, not until it hits the target. What do you reckon? Yeah, let's do that, yeah?
What we're doing, say that again, Theodore?
So do it until the point where you trail your stop loss, not until it hits the target, so the drawdown. So let's take a look at this, right? So this was the first bar which took the swing high, isn't it? Let me take this. So there you go, this is the one, variation 1, isn't it?
Yep.
Yeah. So that's the first bar.
One bar.
Second bar. But second bar hit our target, right? But I'm saying you wait until the bar until you trail your stop loss. So we need one more bar. So this would have hit the target already, so we enter all as normal, yeah? So we enter all as normal. That exit price was 160.40. We got 2.18%. But I'm saying is that don't fill up this column yet, the maximum drawdown. Oops.
Get it as well. If he's listening to me comes back for his holiday.
Okay, that's good, yes. So yeah, so we got this 8 Feb and yeah, so now we go on to 15 Feb, isn't it? Okay, let's move on. Yeah, so this is the bar, isn't it? Yeah, that got us in.
So that's the confirmation bar, yeah.
That's right, 15th of Feb.
And that's, I think it's an uptrend as well, eh?
Yes, that's right. What variation is it?
I've got it sitting next to me, but I've opened my page just to look at it. It's higher high, higher lows, then it's breaking a high. Well, we're hoping it breaks the swing high, aren't we?
That's right, yeah.
But we're going to enter before, because this is what we're doing on the close.
That's right,
Of
yes.
the confirmation of the swing low. It's sort of variation 4.
That's right, yeah. Yeah. So this is a variation 4 setup, isn't it?
Yep.
So that's what's written here. So that's a long. So now, so let's enter all this. So the close. So the close is 16133. You got that, right?
Aye, but something's come up on the screen, so I didn't see it.
Okay, so
on your screen, something come up on your screen there. 16133.
yeah, that's right. Yeah. So 16133. Then we would then get the high and the low. So the high is 6170.
6170.
And the low is 60
60.06.
60.06. So if you can have that in mind. So 6170, right? 16170. What was the low? 16.
It's this 03.
03 was it? Okay.
03.
Okay, there we go. So we got 6003. We got all that. So we got the entry. We got the stop loss. We need to measure the target. So the target would be from here to here. Remember, yeah, the previous one.
Yes.
But you need to do it the opposite way so that the 50% goes
up the way.
That's it. Yeah, you got that. So this is 150 we go for.
And that will be 150 we're looking for
Yeah,
again.
6541. Yeah, 6541. 165.41. Brilliant. So we got all that now.
So, wait a minute, was that 150? Because it disappeared there again, Theodore. I lost you.
Oh yeah, we're going for 150. Yes.
Yeah, right, that's okay. That's all, because I said that's what I said to you, 150.
Yeah.
Yep.
So 6541 is what we're going for, and then that's pretty much it. So let's see what happens. So we got all the details we want to. So this one, you see, it went, so it took us out, right?
Yep, aye, very next day.
Yeah, the very next thing.
That's what you call a 1% wipeout.
That's right, yeah. So that will be, yeah. So now,
There's the drawdown.
exactly, yeah, that's a full 1% drawdown, isn't it? So now that would be for the same as our stop loss.
Maximum it went down. No, it went further.
So yeah, so that's it. So this one here would all be the same all throughout, isn't it? 16002. So we got 1% loss. What is the maximum it went out?
Did it not go lower than that? What is this? Where's the low? Where is it? The low is...
Oh, but doesn't matter because we will get stopped out, right? Because our stop loss is there. For the
oh right, but it says maximum right.
Of course, yeah.
So would it not be the lowest of that bar?
No, because the maximum drawdown your account can have, isn't it?
So, that means it's just gone to the stop loss then.
That's it, of course, yeah. You've been stopped out.
But he's looking for the maximum of the drawdown, where it went to, is it no?
Yeah.
Is that not what he's looking for, to see what the bottom of that, the red bar is?
No, he's actually looking for the maximum drawdown that your account suffers.
Right, okay.
Because
right, okay.
yeah,
right.
because
I don't want to confuse the situation. So if it goes, it's just a close.
that's it.
Sorry,
Because you
stop
see,
loss.
you know, to understand it, you always go back to the purpose of this column. The purpose of this column is for us to tighten our stop loss, right? So in this case, there's no tightening there because it just hit your stop loss basically.
Yeah.
That's all.
Right. Okay.
Yeah. So now the maximum the trade ran is the high of this bar, no?
Yep.
So the high is 16185.
61.85.
So 161.85. So there we go. So we got all of that. Maximum consecutive swing high or swing low trade ran to. Did it go anywhere after hitting us? Let's see. Yeah, you did, right? Look at that. It's incredible.
Yep.
Yeah. So let's see. Yeah, there you go.
There's a swing high there.
That's brilliant. That's a good example.
So the maximum.
163.42.
Yep. 63.42. So see if you had a bigger pip spread, you'd have still been in it.
That's right. Yeah. You see, this is the beautiful thing. Is that's why it's all cumulative, isn't it? It's never just on. It's never on one trade.
It just says you're looking for 70% predictability, and what's the best?
That's right.
Tighter or longer. Do you know what I mean? And it's just.
That's right.
Just need to go with the flow.
That's right. Spot on. Exit with trailing stop loss. There's nothing to trail because it hit the initial stop loss. So 16002. Yeah. That's it. There we go. We got our results now. Yeah. And when did we exit it? So we exited on next day, no?
Aye. So the 16th.
Yeah, on the 16th. That's it. Yeah. Brilliant. Spot on. So there we go. So we got this. It's good that we had this example, so it makes it all very clear now as well.
I feel a bit more confident with it. It's just for me to see the Fibonacci extensions, try to get it. I don't know if I've got the levels in properly, so if I can't get that, I'll phone Rishi.
Oh yeah, no, why shouldn't you get it? You can ask me right now, we can share the screens and...
No, I tried to do it before, and I don't think I've got them in right. I don't know what I've done.
How about now?
Go back and have a look. How can I share my screen with you? How did I do that?
I just gotta stop sharing on mine. And then go to the plus button, and then just say share screens. Are we okay with this, Jim? Yeah?
Yep.
I'm going to make a copy of this, yeah?
If you make a copy and send it to us, then we can all look at it. Add participant, send files and more. Is that the button I'm looking
Yeah.
for? No.
Go to share screens, yeah. That's it.
I don't see where that is. I don't see that. It just says, see the plus button?
Yeah.
It says add participant. Is that it?
No, on top of it should have share screens.
No, I don't see that.
Okay, let me show you. How come you don't have it? Maybe you haven't upgraded your one, is it?
Probably not. Add search.
Okay, can you... Let me show you. Okay, can you see my screen? Okay, can you see this thing here? The plus button here?
Yes.
Now... You click on that plus and you say there should be a thing called sharing here.
Yes, I see it. Share screen.
There you
So
go.
I'll only open mine.
Yeah. So let me just stop mine, and then you can now share yours.
Right, I'll just press start sharing then. Yeah.
That's it. Yeah,
It,
yeah, that's it.
right,
Yeah,
right.
yeah, yeah.
Right. I'll just go in the pound dollar anyway. Can you see it?
Pound dollar. Okay, hang on. Yeah, I should be able to see it. Hang on. Yes, yeah, I can see that.
Fibonacci. I know. I'll just. Can you see it? Aye.
Yes, I can see it. Yeah.
I'm just doing point to point. So if that's 100%, see that 1, 2, 3, 6 and a 1, 5 is there, isn't it? It's added, isn't it?
Yeah, there you go. You got it, man.
I'd see it. When you told me the other night, don't put it in the points.
Yeah, that's
So I
right.
got it in, and I think I went back on, and I obviously have not used it since. So, so I've got it in. So as long as the top's at going long, as long as the 100's at the top of the swing high, isn't it?
That's right.
In
Yes.
case you're 1, 2, 3, and 150, and for going short, the 100's got to be at the bottom, isn't it?
That's right. Yes. Yeah.
Drag it down.
Yeah.
Right. Okay. Right. That's fair enough. So I do have it.
Yeah.
Yep. Right. So that's us pretty much in, isn't it? I just need to get the sheet, and you put that in my file. I just need a copy of it. Take a copy and you use that as a master.
That's right. Yeah. Let me just do that right now. So let me just share my screen back. So you can do stop sharing.
Right. Stop sharing.
And okay, so I need to go and copy that thing, isn't it, for you? Hang on. So there we go. So we can just get rid of this one here. So we can have 1, and then that would be 2, and that would be 3. Okay, brilliant. Okay, awesome. So this one is
I can't see your screen.
yeah, I will show it to you in a minute.
Alright.
So this
Okay.
one is yeah. Okay, good. So now that's what we have. Let me show you where is all these things right now. 1.48%. Oops, this goes down. 5. Okay, brilliant. 2% is AJ, isn't it? AH. AH JK. Okay. So copy, insert, right. I think this should work. Let me see. A05 is that? I don't know why it's not. Is that not working? Sure. Okay. Control C. Control V. Okay. Okay, I think this should be it. Just do. That's the thing with templates, isn't it? Because if you feel that you need to edit one more column, you got to edit everything back again. Okay, I think this should be good now, Jim. Tell you what. Okay, Jim, let me just show you this now. Okay, brilliant. So this is good. Let me just share the screen with you. Okay, so there we go. Share the screen. You can see this. So now I'm going to show you where the file is, yeah?
Yep.
So you can see over here, under DB Elite. So let's go under DB. Let me show you from the top. So if you go under Elite Systems, then we got End of Day Elite, then we got DB Elite, then we got Backtesting, then go under Gym, then you go under, use this one called GPUSD DB Elite Gym, yeah?
Yep.
That's pretty much it. All the rest are all template versions.
That's fine. Just the top one, that's me.
That's it, yeah. So that's the one that we want to be using.
Good.
Yeah, so I think if you keep doing that, just for GP,
keep me busy.
yeah, that's
keep me busy over the Christmas period.
That's it. Yeah, just remember that to copy the dates over from the other one, which is in the either in the master list over here. Yeah, you can copy the dates over from.
Yeah.
So basically, you can open that and just go into your one GPU 2011, and then 2012, and then you can go on to.
What I do is I just print it off and set it next to my computer.
Yeah, so that's it. Yeah, all the variation numbers are here as well.
I know, but I don't want to use them because I'll cover them up as I'm doing it.
Oh, that's
So
very good. Yeah.
I'll try and find it, then see where I went wrong, and I'll try and deconstruct it where I've made a mistake.
Yeah, that's very good. Yeah, that's brilliant.
Because I want to, obviously, I want to learn that. Not
Okay, that's very good. Yeah, because essentially, yeah, we want you to start trading it.
Sajan actually says, could you actually just go there and pick a trade and do exactly? And I says no, and he said the same. So I says, well, we don't really know it then.
Yeah, fair enough. Makes sense. Good point. The last thing I need to go, because I have to go now. But just a quick favor from you, Jim, is that we are writing up an email for next year. For bowling again. Like, I think we are inviting new people.
Have you been practicing?
No.
Sorry, dear.
Yeah, no worries. That's very good. Listen, I think so. The recording for this is so far so okay. So I will just stop the recording here so that you all can have a copy of this. Yeah.
Right,
Okay. So let me